everyone. Welcome to the Stock Market Morning Prep video for Monday, January 5th, 2015. Hope everybody enjoyed their holiday season. I know I did, probably a little bit too much. Want to recap what we called out in December, and then I want to run into our analysis for this week on the indexes only. I'm going to be putting out some more indicators as we've been doing, and then, of course, I'm going to put out some predictions in the latter part of this week. So we came into December looking for some tax selling weakness. We did get that, and rightfully so. I also mentioned that if FOMC, that meeting, if Janet Yellen really had no surprises, I think we rally after that. And boy, did we get that rally. We rallied probably, I believe it was 8 days straight up. And then, of course, we had some weakness going into December 31st, and, of course, followed through on January 1st, last Friday. So where do we go from here? Well, I'm looking for some weakness to continue now, but with a lot of chop. So what I mean by that is we're going to have a couple up days. We're going to have 2 or 3 down days, which is fine. That gives us a little bit of volatility to play with. And as traders, we welcome volatility. But we am looking for a deeper correction this year to happen in 2015. When? Well, I probably am looking for somewhere around maybe February, March, somewhere around there. Once we get through this choppy period, then I'm thinking about at that time. Now, it's too early to really pinpoint accuracy of what's happening, so we need to really digest price action on what the markets are what the markets are going to be doing in the next few days, few weeks. So we'll just keep an eye on that. In the meantime, I'll have some projections in the next couple of days, and of course, the morning call videos will resume as usual. So let's get right into the index. We have the transportation IYT ETF, and as you can see here, a lot of the indexes, the majors, are starting to look like M-top formations, right? We have this here, this M, right, and the neckline is going to be right down here. We are now still above the 20, but watch the transports, because if crude continues to weaken and the transports start to weaken, well, that's going to be a little telltale sign that maybe the markets are starting to finally move lower. Here's the S&P, as you can see, the daily, and we're starting to roll right back into the 20. So everything has held the 20 right now, most of the indexes, but as you can see, we're starting to roll over, which is a good sign. We're starting to unwind that overbought reading that we've had. So next target would be right up into this area here. Call it right around, I believe, let me get my crosshair around here, right around 201.17. So that would be the next target area if we were to lose the 50-day moving average. Qs, same thing. You can see that M formation, that lower high from this previous high. This is the area we're going to be watching right here. It's going to be par 100, and that's going to be the next area if we were to break that 50-day moving average. Now, to me, I think nothing just goes straight up or straight down. So if we are continually starting to make series of lower lows and lower highs, then I think you'd be okay to short rallies at this moment. Okay, remember, technical analysis does change right away, so just make sure you guys are aware of that. All right, next area, we have the 20 again. As you can see, we're still well above the 50 on the Dow Jones. And of course, if we broke the 50, we'd be down to this area here. Remember, look at this thin zone. We have a real thin zone here happening. So if we do lose this 20, we'd easily get to the 50. All right, and then probably work our way down to that lower end of that trend line support down there. Okay, and the IWMs, lastly, would be the IWMs. And as you can see here, we've already tagged the upper end of this channel area here. And as you can see, we had this real thin zone up top. We rallied up for 8 days, and 2 days we took it all back again. And as you can see, fear and greed. Fear is much faster as far as price action than greed is concerned. All right. So now we have this consolidation here that we had since early November. And I have to tell you, following the IWMs and the Russell, I think I mentioned in December, if the IWMs start to really break down, now remember, this has been the problem child of the indices, of the 5 that we follow all year. Yes, we did make all-time highs. I believe it was on Thursday early, December 31st, early on. I think it was 12.22 in the future, and then we started to roll back down again, and we gave it all back. Now, if this starts to really break down, guys, then I'd be looking for some further weakness in the other indices, and I do believe that the Russell will take down the rest of the indexes. Okay, so let's just keep that in mind. Let's keep it really simple, keep real simple analysis. As I am looking for further weakness, but I'm not. What's the word I'm trying to use? I'm not worried about shorting any rallies. Let's put it to you that way. more inclined to look to short rallies if the rallies or the retracement, if you will, is very weak, okay, and on lesser volume. So just keep that in mind, okay? Again, make sure you guys do your own homework. Make sure you follow your analysis and make sure you compare it with mine. And if you do like it, then react to your trading plan. All right, guys. Again, welcome back. It's good to be back. We'll have our market analysis on a regular basis moving forward. Thank you very much, and have a great day. And we will speak to you tomorrow.